Welcome back to another Market Open live stream. About 60 seconds behind there. Had to get my hair done. Sorry about that. But anyway, very interesting that this OpenAI fallout is continuing. You've got Janet Yellen this morning suggesting clearly we've taken part or taken note of what's gone on with OpenAI. Not only that, but you actually have sort of this fallout right now of what appears to be a large group of OpenAI individuals right now, a lot of employees at the moment tweeting that OpenAI is nothing without its people. This is not probably the most ideal for OpenAI itself, as it's entirely likely that they might lose almost all of their employees. So it's just not going to shock me. It's going to be tough to see how many people stay at OpenAI. Now, one of the challenges is you have a lot of people with a lot of stock at OpenAI, and I mean we're potentially talking about millions of dollars of stock for each employee. So there is this idea that there could be this solidarity exposed on Twitter, and people might be excited about expressing their support for Sam Altman and his crew, but will the employees actually leave and burn their stock options? I don't know. We'll see about that. I mean, theoretically, keep your stock, at least stock that's vested, but if that then becomes worthless, then you basically destroyed it. So very interesting. I think it's also very likely, though. I mean, to me, it seems like Shear's POV on AI is let's slow down a little bit with AI. Let's not let it go too fast. And you've got Sam Altman and sort of the Elon types that are a little more like, let's move fast and break things, which we know in AI could potentially be risky, or it could be where we could be very far away. It's too soon to tell, which it is, mostly because we don't exactly know what happened over this last week just yet, but we'll pay attention to it. Otherwise, we have some talk here about the Cybertruck for Tesla, that what will determine the fate of the Tesla and the Cybertruck, which I think many of us believe it'll be just fine and it'll be a good success. I certainly believe that as well. But there's a piece here from Bloomberg Intelligence. When Tesla starts delivering Cybertrucks to customers next week, it will need to answer a question with major implications for the broader automotive industry. How much does the thing actually cost? While Elon Musk first unveiled the prototype in 2019, he touted a mid-tier version with some 300 miles of range that would be priced around $50,000. At the time, that was only a few $100s above the average price people were paying for a Ford. Obviously, since then, there's been a little bit of inflation. Things have changed just a wee bit. But that was 4 years and a pandemic ago, says Bloomberg here. Tesla has scrubbed specifications from its website. Inflation and costs are probably up somewhere around 28%. Some reservation holders think, there's going to be a dramatic increase in the price. I think so as well. And I think there has to be a 4-year wait period. It's certainly likely, especially with the amount of inflation that's occurred. So in terms of speculation that Bloomberg gives, they suggest that Tesla will probably end up trying to go for something like a $60,000 price target for a Cybertruck. They see that as being a commercially viable price or a vanity product. So they see $60K as being that number. If you end up getting like a 49.9, unlikely. If you get like a 59.9, that's probably the place to be. Now, excuse me. Remember, the one upgrade that Tesla generally, well, pretty much the only upgrade that Tesla has beyond range or miscellaneous things like a tow hitch or not, which I imagine this will just be included, a tow hitch on this particular vehicle, given what it is. But then again, maybe we shouldn't assume that. But anyway, the way to look at the CT is you're still going to have the upsell of FSD. One of the things that is problematic is the take rate for FSD. If there are any Tesla fans or should I, any internal Teslaians listening, I would mention that I've done a little surveying and I've talked to some Rivian owners. And what I found that was very interesting was a lot of Rivian owners actually started with a Tesla. And I'm like, oh, that concerns me a little bit. But I wanted to see, what kind of practical reasons there could be. And the practical reason people are buying Rivians is because the Rivians, like the R1S, the SUV, and then, of course, the truck, given that it's truck, both of those have more practical space than what you can get out of a Tesla today. Practical space in a Tesla is very limited in the Model Y or the X. And once you put the seats up, it is not very spacious. There's very little trunk space. And then certainly they're not trucks. The R1S is a lot more spacious, at least based on the opinions that I'm hearing. It would be very interesting to sort of maybe just compare the cubic volume of them. I suppose we could do that, but then arrangement matters as well. So R1S cubic volume. So 104, let's see, maybe the Model X is exactly the same and people are smoking junk. In which case it's a marketing thing, right? Oh, actually, yeah, that's a difference. Wow. Okay, so the R1S is 104.7 cubic feet. The Model X, okay, this is for cargo space. The Model X is 91 cubic feet. So that's almost 15 cubic feet of a difference. 91 divided by 104.7. That's about 14% different. Well, people notice that. What about the interior entirely? R1S interior cubic volume. So that's trunk. Okay, well, they don't make it very easy to figure out the entire. Anyway, so those are some of the items that I've heard. So I've heard space, but I've also heard some of the prior Tesla folks. They don't trust FSD, and they don't even bother trying. Like, it's almost in a weird way, like some people have gotten numb to FSD. And it's crazy because it's gotten so much better today. I am such a big fan of what's it called? I've been such a big fan, or people in general, as well as myself, been such big fans of FSD, and it's gotten so good. I mean, from a year ago, the amount that I could let the car drive compared to today is probably somewhere around 30% higher that the car can drive today. In other words, maybe I've gone from somewhere around 80% of the car driving back then to now somewhere around, quite frankly, 94% of the time Tesla's driving, something like that. So getting some of those original Tesla owners to try the FSD in their cars, I think would not be a bad idea. I think it was probably challenging that they gate kept FSD for so long to certain randomly selected cars or individuals, that it's actually made it harder to now convert the non-techie group, the more maybe like ready to, like, I guess I would say you've got the Tesla owners who want to adopt FSD on one end, and then you have like normal drivers almost on another end. So finding that balance between the two, I think, is critical. Anyway, so my thinking is, if you're Tesla, you're thinking about cargo space, interior space, FSD. How do we market? How do we make changes that could potentially keep us moving with a competitive edge? As far as El Marketo today, we are looking at indices, roughly a few basis points to the downside. No real movement here. We do have the 10-year Treasury up about 3.5 basis points. We have oil up about 2%. Gold's down about 0.5%. And let's see here. Why is it doing that? There we go. Okay. And then we've got BTC sitting at 37.2 right now. 37.2, pretty impressive. So as far as cost per mile of range, ooh, how interesting. Take a look at this. I'm going to throw this up on screen. I think this is a neat metric to pay attention to with the, for the Cybertruck compared to the other vehicles that we'll see. I'm going to pull this up on screen, and let's make sure we have it here. It's called cost per mile of range. So they're basically just dividing the vehicle cost by, let's see here. Well, how much here? Compares base cost for crew cab 4-wheel drive to a potential Cybertruck, expecting that pricing to come out on the 30th of November. Let me make sure this is right. So if I take a peek at this, this is the chart we're looking at. Let's try this. 73,000 for the R1T. Yeah, okay, that's just divided by the cost. Well, hold on, let's see. Yeah, it's just divided by the range. 12-month sales. And then you have volumes on the right of 12-month sale. Okay. All right, yeah, that's fine. So you have the R1T lined up against the Lightning, and just to sort of see the volumes that these vehicles have reached. Obviously, 12-month goal for the Cybertruck is somewhere around 10x this, $250,000. Ooh, we'll see. Oh, I pity the fool who's so dense that they leave a comment like this. Ha ha, subscribers have dropped dramatically. The fool doesn't even realize this is a different channel. Oh, poor boy. But thank you for being here anyway. It's still pretty. Look, the hate is here and he's watching. It's okay. It's okay. So top 5 trucks Tesla owners are considering Cybertruck, Rivian R1T, Ford Lightning. I don't see any actual user of Tesla going for the Lightning. That's a tough move because I feel like you're really going from tech to backwards. But we'll see. Okay, so interesting. You did also, by the way, have a Jefferies downgrade today on Tesla. Let me see here. Let's see here. Where is that Jefferies downgrade? I saw it here somewhere. I want to say it was a downgrade to $210 from $250 as a PT price target. And I wanted to see what their rationale was for that. But it doesn't appear. Let's see here. Yeah, no. Not as accessible as I thought it would be. Let's see here. Jefferies. Come on. Where are you, Jefferies? McDonald's to buy Carlyle's minority stake in the China business. Fine. There it is. Jefferies cuts price target from 210 or 210 to 210. Oh boy, that's a mouthful. From 250. Curious as to why. Let me see if I could find their research on that. Let's listen in here for a moment.
Especially on the tech side of things, there's usually a positive bias in the stock market to Thanksgiving week, although it's not so pronounced. About 2/3 of all Thanksgiving weeks, you do have positive S&P returns. Interesting spot here, right around the 4,500 mark for the S&P 500. You see, we've spent very little time above this level. It was all back in the summer. So we're trying to kind of break out above what we got to in around September 1st after that late August recovery rally. So it seems as if pullbacks toward 4,400, people are saying that'd be perfectly routine from here. You have seen some bullishness and some more aggressive positioning show up in the last couple of weeks as people try to chase or catch a fourth quarter rally. Been pointing out, wrote over the weekend about how yesterday was the 2-year anniversary of the all-time peak in the NASDAQ, both the NASDAQ Composite and the NASDAQ 100 on a closing basis. Take a look at the 2 years since then of the NASDAQ 100 against the equal-weighted S&P. One of my favorite charts, because we keep talking about how the big NASDAQ stocks, the top 7 or 6 stocks, have accounted for so much of the gains this year. That is true, but most of that was just a comeback from last year. So yeah, you have outperformance here over a 2-year basis, but it's really not that pronounced. And it's relatively rare historically to have a negative trailing 2-year return for the NASDAQ 100. It's happened only really 3 times in over 30 years at this point. Also, one thing that we sort of disproved was that the big NASDAQ stocks are somehow uniquely susceptible to rising rates. You saw last year we tracked the long-term treasury prices in the TLT perfectly, and we've diverged completely from them right now. Clearly good balance sheets, better earnings growth, the AI story, all that stuff working to the advantage of those high-quality NASDAQ stocks and not necessarily having them swing along with every rise in yields, Joe.
Yeah. You know, one of the things that it drives a lot of people nuts is this thought that we could actually be getting back to all-time highs on the indices. Let's take a peek at that quickly. Actually, I kind of want to hear what he has to say here as well. But I'll prep that. Hold on a second.
For the last 6 months, we're kind of seeing a lot of it either be exactly true or at least partially true.
Well, I remember on January 1st, I said we're going to have a 10 to 15% gain. I think we're slightly above that on the S&P. Of course, those Magnificent Seven have been a big contribution to that. But Joe, I mean, I only have one worry for next year, and otherwise, I think it could be an absolutely great year. And that is that the Fed will be as stubborn in lowering rates if they have to, as they were in raising rates, being so very late to the game and causing the inflation. I mean, let's face it, last week's data was weak. I mean, people talk about coming in for a soft landing. We're coming in for a landing. It's not guaranteed to be soft, not yet. Now, I'm not calling for a recession. I just want the Fed to be flexible. I was a little disturbed when Jay Powell said at the last conference, "Oh, we're not even talking about lowering rates." I think they should be talking about, not necessarily doing it right away, but the data is looking very different than it just did 3 or 4 weeks ago. Lower inflation, but also a lower level of economic activity that is trending downward.
But you had been talking all along since January, as you said, about that the money supply was actually contracting more quickly than you thought, that the conditions were tighter than they looked, that inflation was being overstated by certain components, and it was actually lower than it appeared. So all those things seem to have been borne out as more data has come out.
Yeah, and really, I mean, we've had no growth in money supply over 2 years. You need about a 5% growth in that important liquidity measure to get a growing economy with 2% inflation. I'm a little worried. He better not go back to the narrative of the 70s. Oh, stop and go. We got to absolutely kill inflation. It's very, very different. In the 1970s, Burns pumped money in at 10% a year without fail. Here, Powell stopped it. It started going down. And of course, I became very alarmed. Then he eased up a little bit. It began to rise. Last 2 months, declining again. And now when I look at that real economic data, I said, he's got to be thinking if they lower rates, they'll get that credit going up again. We could have a real great year for 2024.
Well, would there be any reason to start cutting rates if we have a soft landing? Jeremy, why not? It seems like we normalized where rates used to be prior to the financial crisis. You think we should stay here, or are we too tight right now?
Well, I think we should uninvert the yield curve. And basically, it looks to me that we had peaked at 5% on that long end. Now we're 4.5%. Well, that means that we have to start moving down on Fed funds. I mean, it's not going to uninvert by the long bond going up to 5.5 and 6. I mean, some people talked about that a while ago. No, if we're going to uninvert it, we're going to have to bring it. We're going to have to start bringing it down. And just if we have very little inflation, 5.5% Fed funds is a very punishing real rate. Even with the promise of AI and everything else, it'll be hard to overcome that. Look what's happened in the home building. Now we got good housing starts, but home building sentiment has collapsed over the last 4 months, and that is another area of softness you have to consider going forward. So, given inflation is licked, in my opinion, and I've said that for a long time, as you said, real rates are extremely high. With the jobless claims going up, by the way, we had a 2-year high, and in continuing claims, I think it's time to uninvert that curve, which does mean start talking about lowering rates.
Great. Okay, Professor Siegel, we appreciate it. Thank you.
Boy, this would be such an interesting outcome that we start actually getting a Fed talking about lowering rates sometime soonish. Markets are pricing in 4 rate cuts for next year. It is not entirely clear if we'll actually end up getting all 4 of those. Obviously, we've heard the phrase data dependent a million times. But if we look at interest rate probabilities, let's see here. We are building in, here. I'll pull it up on screen and you'll be able to see it in just a moment here. You'll be able to see this decline in rates expectations, which, let's peek here. Okay, there we go. Here's the world interest rate probability curve. So what we've got here is current pricing. We've looked at this many times before, but if we go out to December on the bottom right, you'll actually see rates sitting at about 4.4 right here, which is roughly, we're sitting at about 5.375. So the 1% marker would be about here. And markets are implying that you'll be there between December and January right now. So sort of the end of 2024. Now we're going to get those 4 cuts. It's anybody's guess. I personally am of the mindset that as soon as that cutting trend really begins, people are going to go nuts buying treasuries, and yields will fall, which could be a boon to businesses pretty quickly. And I think the Fed knows that, so it'll probably be some time. But remember how they function. Jerome's probably looking at sufficiently restrictive, thinking that, well, if rates are 5.375% right now on the midpoint, and let's say inflation is 3.375, then, let's look at, let me grab the PCE numbers. Let's go with core. Oh, I'd like to have like a 3-month average. You know who's really good about having the averages? It's Nick T. Anytime you need an average, like a good little moving average curve, let's see how long we have to scroll down on Nick T's. Oh, well, that wasn't long. All right, there we go. So let's take a peek at this, and then we'll talk about these real rates. So pull this up. All right. Here's CPI with moving averages. You can see core goods is at 0 on your moving average here. This is the 12-month moving average. And you've got core CPI sitting here at about 4. Okay. All right. Let's go with 4 then. Unless I could get as well a 3-month. Oh, yep. That's the very next tweet. And it's actually interesting. Let's see. Core CPI on the 3-month, you're sitting closer to 3%. 3-month annualized. Okay. Interesting. Well, we'll look at both. Okay. Stand by. So pop in here. If 5.375 is the current rate, and 3.375, let's say is core CPI, 3-month annualized. Okay. What that means is right now we're sitting at real rates at 2%, which has roughly been deemed to have been the level of being sufficiently restrictive. Now, the cool thing is, once, let's say, this 3.3 drops and we get to, let's say, 2.5. And we might get there by the spring. Now, all of a sudden, if you do nothing, your actual interest rate that you're applying to the economy is going to bump to about 3.87 or 2.875. So it would almost be like raising rates from 2% to 3%. It's for that reason folks believe the Fed will actually try to keep that rate at 2% and probably drop this to about 4.5%. That's an expectation. Now, of course, if you're at, you could just use the same spread, basically 5.375, and you're going with a 12-month moving average, and you're at 4. Well, then you could say on that measurement, real rates are about 1.375, and maybe you want them to be closer to 1 if rates start coming down, or you want them to stay at 1.375. That's fine if you use that higher rate. Well, as that higher level comes down, let's say it comes down to 3.5, we would also expect this to come down. So this would come down then to about 4.85 or so. So that's really what, once markets realize that's coming, whew, pretty excited. Let's listen in here. What do we have here? Apologizing. Let's listen to that for a moment.
At this point, the best case scenario is also keeping Altman and Brockman, who are extremely important to that operation, in Microsoft's corner. So I think, is this a win for Microsoft overall? No, and it caps off what has otherwise been an amazing year for the company. But I think he has to do what he can in an incredibly tumultuous situation and keep those.
Really, I saw this as a win. Let's keep listening though.
Do you have any sense of what Microsoft may have offered Altman and Greg Brockman to come over? There was also reports that Altman was looking at starting other businesses. He's an entrepreneur who has investments in other things in lots of different places. He was thinking about doing hardware. He was thinking about chips and the like. If he comes into the Microsoft fold, can he still experiment and do these other projects?
I suspect that Altman will be given the independence necessary, but the important thing here is that Microsoft has the resources, which is the computing power that you need to build these generative artificial intelligence businesses. I mean, Altman had said in the past that he would need to probably raise as much as $100 billion to develop OpenAI's technology. You just need an absolutely ridiculous amount of capital and computing power to do the kinds of things that Altman and Brockman and others are trying to do. So that is the leverage that Satya and Microsoft has in this moment. And that's how you see that deal coming together so quickly.
Hey, Kate, there's some reporting from Semaphore that here's their understanding of it. The new Microsoft OpenAI dynamic, as best as they can tell, is that Microsoft has the exclusive rights to use OpenAI models. So OpenAI can't train any of these models without using Microsoft. So OpenAI, if they went to Amazon or Google and asked them to train their new models, would be sued by Microsoft. They all have their own models over there anyway. And so it gets really muddled what AI is without Microsoft, and if all these employees leave. I mean, it sounds like OpenAI basically went to zero in a matter of hours unless they can fix this.
It's a tremendous loss of value in such a short period. I mean, another big part of this conversation is OpenAI had raised billions of dollars, obviously largely from Microsoft, but also from venture capital firms like Thrive Capital, like Sequoia Capital, Andreessen Horowitz. These are some of the biggest venture capital firms in Silicon Valley that had valued this company as recently as weeks ago at $86 billion in a secondary share sale. So what happens to those investments? I mean, how do these investors react to this?
I can't stand how VC does due diligence. I don't trust them as far as anything. Like, they threw so much of their reputations around so many companies. WeWork over and over again. The next company, the WeWork guy, FTX. These are corporations, massive corporations, venture capitalists. Like, people rely on them to do good due diligence. And quite frankly, I think they just suck. Like, I'm so jaded after the last few years about these VC firms. I think they're all, quite frankly, no bueno. I mean, maybe I'm wrong. Maybe there's some really good ones out there, but I think it's the greater fool theory. Hey, we'll pay you $86 million for your shares because we're going to turn around and try to sell it to some saps for $120 million, or $1 billion as a valuation. It's ridiculous. It just feels wrong, Like you're told that, oh, we should be able to trust these VCs because they do great DD. I don't think they do have any. I honestly wonder how many times VCs are reading earnings calls or company earnings. I wouldn't be surprised if it's 2% of the time, relative to the rest of the time. It's whining and dining. It's all bull crap. I don't know. It pisses me off. But anyway, very interesting. The OpenAI co-founder suggesting he regrets his role in the board decision, which is really interesting because it sort of sounds like a realization that basically he destroyed the company, which feels like a little too late. I kind of love some of the replies to this. So here you go. Yeah. Saying, I deeply regret my participation in the board's actions. I never intended to harm OpenAI. I love everything we've built together, and I will do everything I can to reunite the company. And then you have Dylan saying, what? First, what? This is almost like this would have almost been better done. Well, I mean, who am I to say it would have been better done? I would have laughed more with we need like a what? Okay. That's the way I read it. What? Mistakes were made by the board I control. Yup. Thought this was a parody count at first. Oh. Yeah. People building AGI unable to predict the consequences of their actions. Oh. Ouch. All you have to do next is X tweet Zeet. Oh, that's interesting. OpenAI is nothing without its people. That's going pretty wild right now. Lot of insiders at OpenAI tweeting that. If you search for that, boy, it's just almost like spam at this point. OpenAI. Yeah, my feed was flooded with it this morning. Yeah, here's some examples of it. So here's Mira Murati. She, by the way, keep in mind, she's she was the chief technology officer over at look at that. OpenAI is nothing without its people. That's a lot. It's a 23-second scroll here. It's a lot. Well, I guess it's one way to like put out like a recruitment advertisement, right? It's like, oh, where are all the people who work for OpenAI? All the employees tweeted. This is a perfect tool. This would be great for X to start sending them all offers. They need to pick some of these people up. Can't all go to Microsoft. They need some people to defend, to fight the good fight.
Shares up 1.5%. We'll end with Penn Entertainment, which is higher by 4%, just around 70,000 shares of volume. The casino, gaming, and online betting provider getting upgraded to buy from neutral at B of A. The target price goes up to $30 from 27. They cited, amongst other things, the successful launch, guys, of its new online sportsbook partnership with ESPN, Becky. So watch Penn Entertainment.
Oh, this is making me want to go to Vegas. You gotta go put it all on black.
Let's get a final check on the markets before we hand things over to Squawk on the Street. You're going to see the futures. The Dow's still down by about 5 points. We started the morning in positive territory. Then it was down by about 35. Now it's down by 8. S&P futures up by 1. The NASDAQ up by about 16. We've also been watching yields, and those yields, of course, have been contained. With the 10-year still below 5.5 or 4.5%. The 2-year just below 5% at 4.9%. That does it for us today. But we will be right back here tomorrow. We will see you all then. Right now, it's time for Squawk on the Street.
Yeah. All right. So the Sam Altman thing. It's crazy how much news that's taking compared to. I thought the Argentinian president would be on front pages of most of this, but you're not seeing that at all. It's all Sam Altman. Front page of Financial Times today, Sam Altman. New York Times, Sam Altman. Wall Street Journal, Sam Altman. Everyone's talking about Sam Altman. Let's see. Barron's. It's up there. Believe this stock market rally. The S&P 500 can hit a new high this year. Oh, let's look at that one together. And then we'll have to look at some bearish stuff because we don't want to be, we don't want to be too one-sided. You got to be careful. We got to balance the love. Yes, with some bearishness. All right, so let's pull it up. Okay, S&P 500. There we go. The stock market rally has been convincing, so much so that this is Barron's, are now convinced that the S&P 500 can hit a record high by the end of the year. Wow, the end of this year. Okay. All right. That's interesting. Let's see what their thesis is on that. CPI coming in lower. Yeah, well, that's why I've been talking volatile Nike swoosh. It's people's realization that inflation is going to go away. Chances of an interest rate hike in December have fallen to just 0.2%, according to the CME Watch tool. 28% chance of a rate cut in March. S&P 500 has advanced 10% over the past 3 weeks, largest 3-week gain since 2020. This rally is one to believe in. Oh, okay. Who's saying this? Jim Cramer? No, he's on CNBC. The S&P 500 has now broken above its critical level of 4,500. Oh, wow. 500 employees at OpenAI. Hold on a sec. I want to see this here. What is this? 500 employees have signed a letter say they may quit and join Altman on the board. Well, over at Microsoft, on board at Microsoft. I get it. Okay. 500. The letter's release follows an extraordinary head-spinning weekend. Yeah, we saw that. Wow. That's a lot. All right. We'll keep going with our S&P 500 here. So S&P has broken the 4514 level, critical level. We've got one level remains in the way, 5420. Sorry, 5420 was the price of Twitter. This is 4520. I read that totally backwards. The index has run into resistance around that level before. It's struggling to break through it now. If the S&P 500 breaks through 4520, it should be off to the races. No way. That's actually really interesting. That's this suggestion that you could really be close to something here. I want to look at it. Let's see here. Let's go to if I just pull SPX. Yeah, here we go. Okay. Look at where we sit. 4514. So they believe that 4520 is a critical level. That would be right about here. Okay. This is like the previous close high. 4521. Interesting. Very interesting, Barons. Anyway, the setup here is to make a run at that peak. Some obstacles, though. Treasuries, yields, whatever. Okay. I mean, somewhat generic, but interesting to hear them suggest that breaking 4520 on the S&P 500 could be what actually sets the market off to a larger rally going into the end of the year. That would be clearly a reallocation as people are more convinced that inflation is indeed going away. Okay, very well. Let's see here. All right. What else, parents? Hold on. Let's listen in here for a moment.
Basically, man, he could only go to Microsoft, but I don't know.
That's conjecture because I can't.
Conjecture.
And he had no shares, right?
Right.
He had no shares.
But you also had this weird nonprofit aspect to it. Remember, OpenAI was a nonprofit. That's why Elon Musk was so upset with him, because he changed it from a nonprofit, and then he took this part that became ChatGPT and made that the profitable part. But ultimately, even as an investor, you were capped at what was originally 100 times your investment, but there's a waterfall that actually lowered that multiple over time.
Have you ever seen a company? Have you ever seen a company go from 80 billion to zero?
No.
I mean, what was
I don't know what
40 to?
I don't know what it's worth. We don't know, Carl, but the fact is, this is fascinating, and especially this latest letter, which basically seems to indicate, to your point, either the company implodes or they reverse everything,
Right.
or somehow Microsoft takes full control. But I don't think they can because of the regulatory concerns
Yes.
there, and that may be one reason why Microsoft didn't even have a board seat, which you can still kind of question.
But
why, for all that money, they didn't have at least one board seat to stop this very thing
How
from
did that
happening.
happen? And who is Emmett Shear?
I don't know. You tell me.
I know
And Twitch.
Oh, the co-founder of Twitch. I don't know. He certainly liked some tweets suggesting that Sam Altman was operating a coup. So there's clearly some bad blood over there. Seems like something Taylor Swift would write a song about. Crypto and other cryptos can keep on rallying, says Barron's. Cryptocurrencies rising Monday. Continued optimism over ETFs. BTC up around that 37 level. We're entering a more bullish phase for Bitcoin and the rest of the digital asset market. And a lot of short sellers of late have really been caught off guard. Excitement over the approval of these spot ETFs is certainly providing a tremendous amount of momentum. A lot of momentum behind the rally. Very good. We will see. We will see.
We can all speculate. In fact, and again, this is pure speculation on the part of people trying to understand what it was that really divided Altman from his board.
Right.
But maybe the next version of ChatGPT is so powerful that they're afraid of allowing it to get it out there. To your point, this is far from
I don't think so.
Right.
nothing. This is, in fact, I mean, I don't know. Have we had anybody we talked to whose opinion we care to hear say anything other than this is the most important emerging technology we've seen in the last 30 years?
It's funny. I want to conflate this with Mike Wilson. Now, he had a note that came out last Thursday. But he's talking about, can the Magnificent Seven basically follow up? The Magnificent Seven, if it doesn't have AI, if Amazon doesn't produce, if Nvidia obviously doesn't produce, which I think it will tomorrow night, I come back and I say, AI is how you're going to get these companies to the next level. And if whoever doesn't have AI or use AI is not going to go higher, the only one that I would exempt is that Apple, because they have a new cycle, maybe they can transcend it. But AI are bust for next year. But if they produce AI, you got another year for the Magnificent Seven.
Would you say the same thing about autonomous?
No.
Can we lose autonomous if we don't lose AI?
Yeah, we can lose autonomous. I feel so bad about that. I mean, I rode with Kyle Vogt recently in San Francisco. It was exhilarating.
Oh, here's the OpenAI letter. Thank you for bringing my attention to this. Okay, so breaking 505 of the 700 employees at OpenAI. This was just posted shortly ago, in the last 20 minutes here. Tell the board to resign. OpenAI is threatening to quit. Yeah, no kidding. Okay, here it is. To the board of directors at OpenAI. OpenAI is the world's leading AI company. We, the employees of OpenAI, have developed the best models and pushed the field to new frontiers. Our work on AI safety and governance shapes global norms. The products we built are used by millions of people around the world. Until now, the company we work for and cherish has never been in a stronger position. The process through which you terminated Sam Altman and removed Greg Brockman from the board has jeopardized all the work and undermined the mission of the company. Your conduct has made it clear you did not have competence to oversee OpenAI. When we all unexpectedly learned of your decision, the leadership team of OpenAI acted swiftly to stabilize the company. They carefully listened to your concerns and tried to cooperate with you on all grounds. Despite many requests for specific facts for your allegations, you have never provided any written evidence. They also increasingly realized you were not capable of carrying out your duties and were negotiating in bad faith. The leadership team suggested that the most stabilizing path forward, the one that would best serve our mission, company and stakeholders, and the public, would be for you to resign and put in place a qualified board. Oh, nice. That could lead the company going forward in stability. Leadership worked with you around the clock to find a mutually agreeable outcome. Yet within 2 days of your initial decision, you again replaced interim CEO Mira Murati against the best interests of the company. You also informed the leadership team that allowing the company to be destroyed would be, quote, consistent with the mission. What? What? Oh, yeah, it's okay if the company gets destroyed. It beats letting the AI out. Oh, my gosh. Your actions have made it obvious that you're incapable of overseeing OpenAI. We are unable to work for or with people that lack competence, judgment, and care for our mission and employees. We, the undersigned, may choose to resign from OpenAI and join the newly announced Microsoft subsidiary run by Sam Altman and Greg Brockman. Microsoft has assured us that there are positions for all OpenAI employees. Dude, Microsoft is so smart right now. At this new subsidiary, should we choose to join, we will take this step imminently, unless all current board members resign and the board appoints 2 new independent directors and reinstates Altman and Brockman. Well, Altman and Brockman ain't coming back. So, rip? Oh. Okay, well, the biggest interesting line of this would be the following. Leadership informed us, allowing OpenAI to be destroyed would be consistent with the mission. That is so weird. Okay, I'm going to quote tweet that because that is very interesting. Okay. I wonder if they know the value of let's see here. Shocking statement by employees at OpenAI threatening to leave to MSFT. There we go. Leadership informed us, allowing OpenAI to be destroyed would be consistent with the mission. Very interesting. I think at this point, even with Ilya kind of U-turning on this board decision here, I don't know there's much they're going to be able to do to save this. I mean, maybe you could keep like 100 of the employees and just kind of keep the service going. That's probably the most likely option is you'll get the next cutting edge versions of AI essentially getting developed probably by the team over at Microsoft and any of the new employees that move over there, because I don't see Brockman and Altman coming back unless the board completely resigned, because you couldn't trust going back after 2 blindsides. You know, it's like the old fool me once, shame on you, fool me twice, shame on me argument. So I don't think Altman can go back. I think that's dead after 2 blindsides. I think you're much more likely to see just enough people to stay at OpenAI to keep the service running, incremental improvements. But beyond that, wouldn't be surprised to see Microsoft take a big win over here. Okay. All right. Well, it's pretty stupid, but all right. Okay. Ooh, what is this? Okay. Okay. Here's a piece on the Fed. This is interesting. Fed increasingly turning to anecdotes to gauge the economy. What? And then at the same time, we've got Max here saying, what do you think about the Kathy Woodian argument about the collapse of the delta of M2? Oh, okay. Well, delta. So delta of M2 is the rate of change of M2. Okay. So let's look it up. St. Louis Fred, M2 money supply. I don't think they give us the exact M2 anymore. There's a deprecated version and there's a new version. Yeah. Okay, so we have to go to the monthly version now. Okay. Here we go. Weekly. No. The next update is this. The weekly series has been updated to continue on a monthly basis. Fantastic. Monthly. Okay. All right. So here's M2. Okay. So M2 is like your money stock. And what you're asking me is about the rate of change. Okay. Well, first of all, we are leveling up, or we are leveling off about what, $5 trillion higher than where we were before the pandemic. Look at that. Feb 2020, 15.4 trillions. Now we're at 20.7. That's $5.2 trillion higher. So we are still substantially higher than where we were. That's what, 38%? 15.4, a little less. 34% higher. So you're talking about the rate of change. So you got to change from a year ago. You're talking about this basically going to zero. Does that really matter is the question. I don't know. What's her argument? What is her argument? What do you think about the Cathie Woodian argument of the collapse of the delta of M2? Well, that's what we're looking at right here. Just to put it in plain English, things just go flat. Okay. So what's her argument? I mean, like, okay, who cares? It's up 34%. I would say, if I was her, I would say, okay, well, maybe does that, what would Cathie mean? The collapse of the M2. I think what she's arguing is that the Fed needs to stop hiking, because that's usually what she argues. And that the collapse of the money supply alone, or the rate of change of it, will stop inflation. That's probably the Cathie Woodian argument, is that the decline of this rate of change would be deflationary. That's what I would guess Cathie Wood means. And I have great respect for her. I love her insights, and I think she's great. But I'm not sure if that's what they're talking about. What? Ark sells Roku? What? Do you know how much I have been bagging on their decision to buy Roku? I'm very proud of them if they dumped it now. And like, remember, it is okay to say something critical but still love somebody, right? I think sometimes there's a very social media aspect of, like, you have to be all or nothing. I don't expect that of any of my subscribers. Like, I see your commentary. I know you're not not everything Kevin says is perfect, and it's not. You shouldn't be that way for anyone, whether it's Elon or Cathie Wood. It doesn't matter. Okay, Cathie Wood still expects the price of Bitcoin to hit $1 million someday. Okay. Founder of Ark, built a firm under disruptive technologies. Where did the Roku thing go? Let's see here. Okay, here's a Q&A. I want to see the Roku thing. Let's just talk about... Okay, let me click on it here. Okay, here we go. ETF managed by Cathie Wood's Ark bought 90,420 shares of Global and sold 28. Okay, they sold 28,000 shares of Roku. Okay, so I think that still leaves them with quite a bit of position in Roku. Let's just go to the Cathie's Ark site. Where is it? Did she dump it? No way. No. There it is. Yeah, okay. I didn't think so, because it was a big thing, and it was a big position in her company. Oh, okay. So this is just a headline that she sold a little bit of a Roku just to finance another purchase. Okay, that's not that big of a deal. Okay, regarding the deflation thing here. The Federal Reserve's fight against inflation has dominated headlines for months. CPI coming in lower than expected. Okay, yada, yada, yada. Walmart, Vans. Tuesday, that would have been last week. Ark Investment Management, Cathie Wood said in an interview with the Wall Street Journal, the biggest risk here is deflation, not inflation. We're seeing more and more signs of it. Yeah, I actually don't disagree with her on that. Okay, so I was going to look next here at... oh, is the stream 720? I'm sorry. Yeah, it is. My bad. I gotta change. I was doing a test yesterday, and I forgot to change it back. Remind me in remind me in remind me at 6:44 to change the live stream quality. All right. So anyway, okay, here's an interesting one. Fed. Ooh, I love the Fed ones. You ready for this one? Fed increasingly turning to anecdotes to gauge the economy. Ooh, so that would be getting away from data dependent and getting actually to people dependent. Oh, it feels like it'd be quite a shift. Oh, also, I wanted to ask this. This might be, I guess I want to hit this, but I want to run this poll really quick before the market opens. And if you're watching this on replay, leave me a comment with feedback on this. So the poll I want to quickly run is the following. Should I, okay, you may already know we have the Meet Kevin app for video notifications coming soon for okay, wait, coming soon for all channels, right? Should we well, I'll say this. In the Meet Kevin app, should we have a text-based news section for daily news summaries? Yes, no, not a priority, only if simple / if simple. Okay, if simple. There we go. Kind of curious to see what people would say about that. Because I'm not sure if how much people care about like text-based, but I was thinking about it. I'm like, I go through so much research and stuff every day. I could just, do a quick summary of videos or of stuff I'm reading, maybe that doesn't even make it into a video, and do like little check mark emojis or just like write a few paragraphs and basically just try to cut out like the bull crap of like 27,000 different mainstream media publications and just kind of give you the bottom lines, at least of what I'm paying attention to. So I don't know if people would be interested in that, but yeah, let me know in that poll. Okay, so Fed increasingly turning to anecdotes to gauge the economy. Well, this is a really interesting one. Federal Reserve Bank President Richmond President Thomas Barkin. Oh my gosh, how did I just misread that? I didn't sleep enough. Oh, I'm an idiot. Thomas Barkin asked for a show of hands. How many business people expect their price increases will be higher next year than before COVID? About 2/3 of the group raised their hands. Wow. Wait, price increases will be higher than next year? Are you mean prices will be higher than next year, or price increases will be higher than they have been? Anyway, come on, guys. I'm just trying to control inflation, Barkin said November 14th to a group of 120 small business people in the town of Westminster, South Carolina. The bad news I hear is the price genie has been taken out of the bottle and it's hard to put back in. I think that's entirely wrong. The price genie hasn't been taken out of the bottle in terms of continuing price increases. Prices will not go back down to what they were. Lower prices are out of the bottle, but continued price increases, I don't think so. I think that's a really confusing thing for most, I think, business owners and consumers to really internalize. Like, wait, like, if we just have zero inflation, prices are this high? Yes. Anyway. The anecdotes, some collected systematically by Fed researchers and published monthly, supported policymakers' views that the U.S. economy was starting to slow late this last year, contrary to official data showing heated growth in Q3. Inflation's a big issue. Barkin's experiment showed, though, that there's sort of a potentially mixed understanding of either inflation or expectations. Fed officials now wanting to be patient. Definitely noticed a more of a discussion on anecdotal data. That would be a pretty big shift if you start moving more towards what small business owners are feeling today in terms of the pain of higher interest rates and the availability of hiring. U.S. inflation slows in broad fashion. Yes, we know that. Peter Schiff had a video the other day, and I was a little disappointed with it. He was saying, there won't be a soft landing. And I watched the video. And I'm like, bro, where was the argument? I want to come visit him again, and maybe we can do another interview because I think he's great. But I just didn't love his there is no chance of a soft landing narrative. His narrative has slightly devolved into, well, the data we're being fed is rigged. And I'm like, okay, I know that could be part of your argument, but if that's your sole argument, I don't know if that's as convincing as it potentially should be. So I was a little disappointed by that. I think if they hear this feedback, give me a little more data because I want to see the the counter arguments. I really try my best not to be just in the echo chamber of it's only going up. Anyway, okay, we've got a few minutes here before the bell. Let's take a moment just to look at the minutes preview. The Fed releases its minutes this week. Let's do a quick minutes preview. Minutes may be most revealing regarding the Fed's attitude toward financial conditions. In October, Chair Powell and his colleagues argued that higher 10-year Treasury yields would substitute for further rate hikes, but financial conditions have loosened in response recently to some of the data we've gotten. Minutes are compiled after the meeting. Meeting officials might include some hawkish hints to try to manipulate the narrative. Oh, that's very interesting. That the minutes are prepared after the meeting. Okay, that seems a little odd. The minutes should be prepared based on the meeting, not after the meeting, and therefore tweaked. I find that a little odd. Who wrote this? Citi? Pretty sure. I believe this is a Citi. Yeah, this is Citi FOMC preview. Stronger than expected activity ahead of November 1 FOMC meeting would likely have led to a 25 BP hike. If not for the 10-year rise beforehand, that's fine. GDP is strong. Became clear in October that the Fed's policy is dependent not just on economic data, but also fluctuations of financial conditions. Yeah, but that's regularly been true. Let's see here. This week's FOMC meeting, financial conditions have loosened, job market remains tight, expansion resilient, but rising continuing jobless claims, anecdotes about slowing demand, and drop in oil prices seem to have made even more hawkish policymakers more cautious. Superficially hawkish rhetoric, with officials pledging to not hesitate in tightening if needed, blah, 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 blah. Okay, very well. So we'll get these minutes this week. We'll go through some economic catalysts as well. The first catalyst coming up here is the bell in 30 seconds. I'm aware of that. Let's not miss it. FOMC minutes, they come out tomorrow, by the way, at 11 a.m. I'll be streaming that live here, so make sure to subscribe here. This week we'll get continuing claims, U of M Michigan as well. We'll get existing home sales tomorrow. Not much coming out today. Let's listen in.
But a lot was done, and remember, I think that people should understand that there is a lot of cash in the balance sheet, that they have, they can do a buyback, they will do a dividend very shortly, I think, and I just think that what's happened is, Carl, that you have a company that I thought at one point may not be able to pay for the Hulu, and that's ridiculous. It will be $25 billion. The tax generation is huge, and I think people should know. And by the way, ratings bonanza tonight. Eagles, Chiefs, and ratings doesn't matter for that. It doesn't matter.
Eagles and Chiefs tonight. Oh, that is going to be almost must-see TV, given the T-Swizzle expectations. Boy, that'll be very interesting. So we'll see how that goes. Very curious to see how this bell opens. Looks like we might be going slightly red here to start. Let's see what we've got. Okay. So here, oh yeah, wow. Nice dump right at the start there. What the hell? Casino is open. Yeah, close it. Stop the count. Quickly. What is this? Red candlesticks on the SPY. Red candlesticks on Tesla. Quick. Stop the count. Microsoft only up 1%. Okay. NASDAQ trying to recover now. Uber down 1%. Let's see the big movers here. Oh, get out of here, Rivian. Enphase is positive. Okay. All right. Let's keep it there. We don't need any more negativity. We have, what do we have here? SoFi down 1.7. Affirm down 1.6. Toast down 1.3. Tesla's down. There's Tesla's bobbing around that 80 bips to the downside. Robinhood about 80 bips. Let's see here. Owlet's up 3%. Invitae's down 4%. Boy, that one's been volatile here recently. Coinbase up 2.5%. Palantir, let's go. Okay. Palantir, I think potentially a much better AI play than Microsoft. Oh, I said it. It's just much more of a pure play. So the growth potential is much greater. Trade Desk up 0.62. Let's see how things evolve here. QQQs. Okay. Still green candlesticks. No, not a Tesla. Microsoft 1.1. Nvidia a quarter. Oh, spoke too soon. Got red on Enphase. Nvidia bouncing off the 493 fib line. 493 for Nvidia. SoFi down a couple percent again. Roblox down 0.6. Palantir still up about 1 as Tesla down about 1. Okay, let's see what Jimbo has to say.
I remember when I started this stream and programmatic came, our ad revenues went from like 20 million to 7 million. And I would call the advertisers and they would say, well, we didn't notice any decline when we stopped advertising
you
with
said
you.
this over the weekend.
And it's like, wait a second. No, I'm relevant. It is like a little bit like that,
Your point over the weekend was that some of these companies that have paused are going to realize they didn't lose anything.
No, they didn't lose anything. That's kind of what happens in advertising when you have a gigantic blitz on advertising and one of them doesn't hit. It's kind of all right. Well, but if one of them doesn't hit and it's because this kind of stuff that's going on, well, David, I think that you say I'd rather be in Microsoft, even though X is not a public company.
Yes, I think you might be certainly after the what occurred on Friday, where there was a lot of concerns. Late in the day, I was getting some calls, people saying, "Oh, what is this going to mean for Microsoft?" Sam Altman outed OpenAI, this large investment they've made. They own 49%. It's such a key part of their strategy. And now you reverse that today. Right. Sam Altman and Greg Brockman work for Microsoft now.
Although Wells has an interesting take,
and many
guys.
other employees too, Carl.
Wells says if you're doing something as mission critical as this build out, maybe if you're Meta, Google, Amazon, you can convince a customer you can't rely on just one shop. You're going to need us as a secondary partner.
Well, I think that one of the things that is so interesting about the announcement that we got just today, this was a week ago they announced this, but when you talk about what is going on at Nvidia, you're talking about the Spectrum X product, and you can get it with a.
Okay, we'll chat about Nvidia probably a lot more tomorrow, especially since we've got earnings coming up. But I wanted to touch on Germany's PPI. Germany Producer Price Index was expected to come in flat for October. It actually came in negative 0.1. Listen to this though. Germany PPI year over year. You ready for this? Negative 11%. Germany is a big deal. Germany, much like China, is a big exporter. We like big in all senses. Anyway, take a look at the German PPI chart here. I have to remove myself from the screen just to show you how tiny this has gotten. That's some shrinkage right here. Look at that. Here's the zero line on PPI year-over-year change. And you literally went all the way up to about 45%, only to crash all the way down to, like Max says here in the, here, prior was negative 14.7%. Now we're negative 11%. It's like, now you're going to go through a cycle of deflation here. I mean, it all makes sense. When your chart goes up like this, you would expect it to shock back the other way, So none of this is like horribly shocking. I think what's shocking is how many people believe that now all of a sudden we're in the 70s again. So, okay. All right. I strongly disagree, but okay. Everyone's allowed to have their opinion. Okay. So let's see here what is else inside. Farmer Brett says Microsoft has been the easiest play in the market. I don't know why I ever bought another stock. Well, you're not wrong. Microsoft has performed fantastically. The question is that the right move going forward? Because obviously hindsight is easy. If we could play hindsight in the stock market, come on. You wouldn't tell anyone about it. You'd be the richest person in the world. You'd be richer than Warren Buffett. The best thing, and this is what I try to do, and, knock on wood, but I think we're on the right path. What I try to do is I try to look and say, okay, where is the world going to be in 2 to 10 years? Then I'm going to position myself for that reality. I don't really want to be in yesterday's reality. And I hate to say it, but I am concerned that Microsoft, to some extent, is part of yesterday's reality. And here's why. I'll give you my exact reasons, okay? So I'm going to take a little screenshot of this. Give me 1 sec. Let's pull that up. Okay, here we go. And then I can write on it, okay? So, and it's just my opinion. Now, I don't hold any Microsoft shares, and I'm not opposed to owning Microsoft, but I won't. I'm not going to buy Microsoft. Again, if it was in my portfolio, I'd keep it. I wouldn't dump it. And this isn't personalized advice for you. It's just my opinion. But here are the problems I see. First of all, if we're going to do our own AI division is going to equal massive spend. And that's fine. They have the cash, right? They have the cash. They have the cash flow, 80% gross margins, something like this, 40% net margins, very robust. Okay. But that also means it's a very safe company. It's like safety with growth, right? So let's call it safe with growth. My fear on the downside risk is that growth will probably substantially lag other growth companies in a return to there is no alternative, or TINA, right? So in my opinion, risk, deflation leading to lower rates, leading to substantial growth at interest rate sensitive, well above and beyond MSFT, plus a move away from MSFT as a safety play. Play. There we go. So that's it. That's it. I can't dispute the fact that they've been a fantastic stock over the last 2 years, and it makes sense. They are a fortress company. They are a fantastic company. I think you could, well, I shouldn't say you. I think it could be held as a core position or a part of somebody's position in their portfolio. Again, I'm not like, oh my gosh, dump Microsoft. I just say, like, if you have no Microsoft exposure, does it make sense to go in now? I guess it depends. If you're in cash, is your forward return on Microsoft going to be better on Microsoft than cash? Maybe. Yeah, that's possible. Like, again, I don't think it's plummeting. Is your money potentially going to do better elsewhere? Yeah, probably. But there's no guarantee of that, because there's also no guarantee that rates are going to go lower or that we're going to face disinflation or deflation. Because if rates go higher, you want to be in Microsoft. That's why it's a safe play, because Microsoft, as rates go up, Microsoft just makes more money. So I'm not trying to bag on anybody's stock or portfolio. If you're, a Microsoftie or whatever, that's fine. I'm just giving, I think, what is a reasonable opinion. In other news, pump it. I didn't hear anything about why Microsoft isn't a reality in the future. Just heard that they're a better place. Well, yeah, no, that's what I meant. So Frogbox, let me just be clear. What you wrote there is actually correct. You know, it's not that Microsoft is bad. Again, like they're brilliant. Okay, they're brilliant. Somehow Microsoft manages to stay out of the FTC's radar. Yeah, that's actually a really good point. Wait a sec, though. No, that's not necessarily true. They just went through hell with the Activision acquisition. Yeah, I've got to push back on that one. They went through hell with the Activision acquisition. Me, Kevin, should go read how many people are pissed at you over the shift to try to learn from it if you honestly give an F. Well, I actually already have basically read everybody's comments on it. Here's, by the way, what I'm thinking about doing, because I realize I screwed up and I make mistakes. I realize that. Oh, interesting. Regarding the poll, 52% of you on the text-based news section said yes. 17% said no. And then 31% said not a priority, but basically do it if it's simple. Okay, so that's about 83% of you would be open to that. Okay, all right, we'll do it. We'll do it then. We'll do it. Go download the Meet Kevin app in the Google and Apple, Android, whatever stores. It's free, and we'll update it. And you can. We're gonna have it so you can fine tune the notifications to the channels you want as well. So stay tuned for that. But to answer the question here about people giving an F, I have a plan. I don't know if it's a good one, but maybe you could leave comments on this. What I want to do is I'm probably just going to go through all my old videos. I'm going to change the titles to make them make sense. Like I'll take a video that's like WTF and I'll actually give it a normal title. And so we'll fix the titles. Then we'll just bring back the entire archive of everything that was unlisted. And we'll put it all in like an archive playlist with relevant titles. So that way, every video that was there in the past comes back in an archived manner where it actually makes sense with titles that make sense. Because I was like, who's going to go back and watch the 20 different WTF videos? So I'm like, oh, I'll just unlist those and react to the good ones, right? That was my thesis. Well, everybody's like, oh my gosh, Kevin, what are you trying to hide? And I'm like, no, that wasn't the intention at all. So obviously I screwed up. I had no idea. Oops. Anyway, it's going to take some time to do that. So stay tuned on that. So I've got about a minute to go before the course member live stream. So I need to go make another cup of coffee. So let's go with the disclaimer. Look at that, Tesla went green. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Palantir, pump it, baby, pump it. Okay, good. Open Door, they suck. If Open Door can do it, HouseHack could do it better. Anyway, I gotta go. I gotta make another cup of coffee and be live again within the next 60 seconds. See y'all. Bye.